This is Paul Singh, the market speculator with bullsonwallstreet.com here with the weekly swing trade report for the week of October 3rd, 2016. Let's take a look at SPY. We're going to look at a few key indexes and then go over some actionable setups. Now, looking at SPY here, we're essentially in the same spot we've been in since this big gap down here a few Fridays ago. And we're still watching for either the break of the bottom of this range around 212.25 or the top of this range around 217. Quite a bit's happened since here. Most importantly, the big Fed rate decision and then the potential bank collapse here on Thursday, which held up pretty well. And on Friday, we tried to break out of this range here. 217 is the range we're watching, which corresponds with a range that goes back here for 2 years and also the 50-day moving average. So if we can get back above this range, we get bullish. If we get below this range, we get bearish. While in this range, we're market neutral, and we don't want to take too many positions. If there's a good short or long, either direction that you like as a setup, take a couple of shots, but you don't want to get too aggressive until we pick a direction. Now, you could step back and look at this and see this a number of different ways. You could see this as a potential remount play here, and it looks like it's tried a few times here, and maybe this third time's a charm here, and then we get back up to this gap fill and the all-time highs, and we're back to playing the momentum trend. You could also look at this as a bearish flag type pattern, and a break of that sets up the down move. But we're not going to make any predictions here. We're just going to wait and see until that happens. So we're market neutral for now, planning, taking a few shots here and there, and then once we get the direction, that's when we step on the pedal and really take those shots. Now, there's some interesting developments that we can trade in the meantime, namely oil and energy. If we look at USO here, putting in that bottoming formation, huge volume this week on the news that OPEC is looks like they're going to cut supply here, which would increase the price of oil. And we can see here the oil market has reacted to that with higher prices. We're in this position in the trade report. We got in on the day of the breakout, so it's working out pretty good for us here. But I'm looking for a bigger move at this point. Now, you can trade oil, and then obviously there is energy, which is tied to it. If we look at XLE, which is the underlying ETF, looking really strong, just like oil, big volume coming in, and had held up well, held up better than USO had, which would be down around here. And we're at our near-term highs here with XLE. Now, there's two things you can do. I wouldn't trade XLE because it's not volatile enough. You can break it down and take some of the best stocks within XLE or oil and gas. If you see this list here, these are some of the top performing sectors, and you can see oil and gas lead the list here. Or you can just trade ERX, which is what I'm looking to do here. An entry here, right where we are right here at, say, 33. Use a loose stop of 2 or 3 points, and we could see a potential move here of 40 or higher, which sets up for a nice reward to risk. So keep an eye out on oil, keep an eye out on energy. And then, as we've been talking about for a while now, semiconductors has shown relative strength to the market and continues to do so, looking really strong here. Now, you can trade the ETF, the triple leverage ETF, which is SOXL. I'd probably want that to pull back in a little bit. Or you can trade some semiconductor stocks. We just got out of AMBA for a nice profit. I'll look for a little pullback to re-enter. And now let's get to our actionable setups. AMBA, which we're watching right here, I'm looking to re-enter if it pulls back and either holds a 9, and then I'd play it as a pullback entry, or a pullback and then a break of the high. So either way there. And then the other semiconductor I really like is CRUS. This is coming off strong earnings here. This big volume day was earnings last quarter, has consolidated, pulled back, tested the 50-day, and now looks to be showing strength here. A low risk entry here with an entry at 53. Let's say you put your stop around 50, that's 3 points, and then play for the breakout here of 60 to 65. A little bit of a longer term swing. Maybe you'd be holding this for 2 weeks to a month. So that's CRUS. REN. Now we're moving away from semiconductors. This is an oil and gas play. It's been on fire since summer here. You can see it's gone up over 200 or 300% here, breaking over its recent highs here. So you could actually enter here with a pretty good reward to risk and see if it can make that next run up, or you can wait for it to consolidate, pull back a little bit, and get in at a little better price. And then finally, another stock I just got out of, which is Quilo, put in kind of a hard pullback here, and we got out here near the highs here. It's testing the 9. So there's two things I would do. One, watch for that test of the 9, see if it holds. You could enter or play for a breakout of the highs. Now, this could end up being a good short setup. So I'd watch this for either direction here. It did put in a lot of volume on Friday on a negative kind of move here. So if it were to break the 9 here and not hold, which is what we're looking for to go long, you could even play it as a potential short and play for a move for that test of the new 50-day moving average. Remember, this is an IPO here. I would probably trade this with a smaller position size. So there it is. We got our analysis of SPY, a few sectors, 4 actionable setups. Guys, remember, Bulls on Wall Street, I have the daily trade report. This is the video here. You've got the focus list stocks, my trade alerts. You can go into Swig Trade Alerts, sign up for a month for $99, or the yearly plan, which is 50% off for $5.99 for the year. All right, guys. So unless I see you during the week, I am actually going to be putting out a few video recaps here. So keep an eye out on the Bulls on Wall Street blog. Otherwise, I'll see you guys next weekend.